Although the Dow is still trading a little bit soggy, it's still trading up above the T-line after this breakout of this downtrending channel. There's a very simple analytical conclusion that can be made when seeing one index like the Dow trading lower and the other major index like the NASDAQ trading positive on the day. That basically reveals that there's not any major change of investor sentiment of the current trend. Right now, the current trend on the NASDAQ, as you can see, was broken out when it gapped up through the resistance level, coming up off candlestick buy signals right off the 50-day moving average. And we can anticipate that if this is another wave, it should be about the same magnitude as this previous wave before the consolidation stage. What the exact upward movement is irrelevant in the sense that as long as we know we're in an uptrend, we can still be buying chart patterns that are not going to be greatly influenced by a major reversal of investor sentiment and give you the prospects of much bigger profitability coming out of those patterns. For example, look at the fry pan bottom that could be easily identified on Amazon. They broke it out on Friday with profit taking, but then they took it right back up. So this still shows that the breakout is still in existence. Again, a wave 1, wave 2, wave 3, the same magnitude as wave 1, should take you up to the $1,000 price range. The breakout concept can also be identified in Netflix with a gap up through the resistance level. Your best friend putting you in a 45-degree, telling us we're probably in the next major wave. Same scenario applied to Apple. You can see the fry pan bottom, then the gap up through the resistance level, telling us that Apple is probably heading up further. But using all three of those charts, which are usually indicators of market sentiment, tells us that there's still no lack of buying out there in the market, that investor sentiment is still very positive. Breaking down the elements of a pattern, as you can see in our recommendation today on EEQ, was based upon a doji sitting right smack dab at the T-line level as well as the 50-day moving average. Stochastics coming up, and it gapped up on Friday, telling us that there was a strong desire to get back into this stock. We were buying on positive trading today, with the overall analysis being that if this is wave 1, this is wave 2, wave 3 should bring us up into this area someplace, giving us a good 10 to 15% upside potential. The nice thing about candlestick signals are that they are reoccurring situations of human investor sentiment that work time after time with a high degree of probability. You don't have to be a rocket scientist or a major analytical analyst to analyze what investor sentiment is doing on a reoccurring basis. That'll be it. We'll see you in the chat room.